Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Saturday, August 27th, 8 a.m. Pacific. That means we're about to do 60 minutes of your questions, my answers. I want to thank each and every one of you for being just a little part of my Saturday. If you want to say hi or hello or whatever you'd like, I do my best to give the people a shout out who choose to log in and leave a comment. I will riff for about 10 minutes. Please use that 10 minutes to do yourself a favor and get your questions in early. The last 4 or 5 months, I have not been able to get to all the questions in our allotted time. So I have turned on super chats. If you do want to jump to the front of the line, we will use that feature. I had a YouTube expert basically call me nuts for not turning those on because, of course, YouTube makes a cut of every super chat. And because YouTube makes money, my channel will get more views if YouTube gets paid. It's a funny game we play in YouTube land. So yes, folks, the only time I talk about super chats is on our live stream because, again, I don't generally have the ability to answer all the questions. If you join and I can't get to your question, the way to jump the line is a super chat. So there you go. So what I'm going to riff about first before we get into the comments is I think my greatest fear is coming to the housing market. It will be good long term, but it won't feel good for you and I to go through it. In fact, it will feel very, very bad for a lot of people that watch my channel. A lot of people that watch my channel are somehow compensated for real estate transactions, right? We have the real estate agents, mortgage brokers. We probably have some flippers and contractors, and it's going to be bad. I think with what Jerome Powell said yesterday, and we have to take him at his word until he proves otherwise, rates are going up. I think the housing market muddles along at 6% 30-year money. I don't think there's any muddling around if we go to 7. If we go to 7%, that is exactly how we get a 50% crash in transactions. We have already seen 30%. Remember what I called. And again, I don't get any credit for this. We called a 30% crash this year, and it's already here. And I said 50% is possible, peak to trough. The Federal Reserve and Jerome Powell in his 8 minutes yesterday said, Michael, we're going to give you your 50%. So again, you're a real estate agent, real estate broker, mortgage broker, anybody involved, right? If you're that 15% of our national GDP is going to get cut by a third. Housing is going to pull us into a recession. Job losses are going to go up. As Jerome Powell said, pain incoming. But now let's flip the script to home buyers and investors. For the longest time, or at least for the last couple of months, I said July 20 was the important date. It happened. Things happened as I prescribed. Sellers FOMO'd, fear of missing out, threw it on the market, wish pricing, blah, 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 blah. That is almost over. We are already starting to see inventory roll over. I'm going to hopefully look at an article that Redfin put out yesterday. Housing inventory is going down. We have demand destruction, which everybody sees. Michael, prices have to go down because demand is falling. Well, no, genius. There's another equation in housing called supply. And if supply rolls over because nobody wants to sell, I'm sorry, you just get less transactions. I know it hurts your little brain to think about, but I'm sorry, it doesn't make me wrong, no matter how many times you yell at me. Housing is just sticky. It moves a lot slower than all of you want. And it's funny to watch all of these channels who were talking about a November crash. They're now suddenly talking about, well, Maybe it'll be in 2023. Well, guys, can you stop talking about a housing crash? Just because we had the once in a generation crash in 2008, 9, 10, 11, 12 doesn't mean it has to happen again. What if the housing market's just broken and we have 4 or 5 years of flat appreciation, 1 plus 1 minus 1? You ever think about that? What happens if we have 3.5, 3.8, 3.9 million transactions instead of 7 million? That's different. But investors, you and me, I am frankly starting to get excited. As I've said, after July 20th, we needed about 6 to 8 weeks for the market to kind of flush out the noise. I have heard from Arizona that inventory is already flattening and Vegas is already flattening. So it's not getting this epic, continued increase. I really do think inventory will be down in August, down in September, down in October, down in November, down in December. And now this is not some crazy ramblings of a madman. Go back and look at the seasonality charts. It always does this. Oh, the people with month-to-month talk, it's funny. Housing is seasonal. And it is very entertaining for me to have people rage and talk about month on month when they don't realize that seasonality happens every year, folks. Did you guys know that the largest number of transactions in the biggest homes generally sell between April and August? That the least, smallest homes sell in the winter? Do you guys know that? It's a secret. It's not a secret. It happens every year. It's funny to look at. But yes, the market is slowing down. Transactions are crashing. I think we are definitely going to get to 50%. It's going to cause a recession. But where investors come in, you and me, there are motivated sellers. And they're going to be so come October, I'm going to call September 15th. What is that, like 3 weeks away? Starting September 15th, certainly by October 1st. So I'm giving myself a 2-week window. We're going to see the rest of the noise come out of the market, right? Wish pricing, not going to sell, cancellations. And then you and I know that a pretty good percentage of the people that still have their homes listed have to sell. And let me just tell you, having done this for 20 years, buying from somebody who wants to sell versus buying from somebody who has to sell, very different. Let's just use October 1st because it gives me an extra 2 weeks. Come October 1st, if you're watching my channel, you should not be offering list price. And frankly, you might not be offering within 5% of list price. You don't need every house. You need one house. You don't need every house. You need one. I saw a comment the other day about somebody who wrote 13 offers and is feeling defeated. Are you kidding me? Really? 13? My record is 100. You don't need every deal. You need one deal. So 13, nothing. Nothing. That's a weekend. I've written 13 offers in a weekend. You guys, this is your future. You think this is freaking easy? Really? You think you just, play with your little realtor alerts and Zillow alerts and, just money rains down on your head? This takes work. 13 offers and you're feeling defeated. Seriously? Come on. But that's what it's going to take, right? You're working in a market where the average list price is 200. Somebody came on at 225, 215, 197. Write it at 180. Who cares? They're probably not going to say yes at 180, but I bet you get a counter. Don't only write it at 180. Write it at 180 and go, I want seller to pay 100% of closing costs and give me a 1-point rate buy down. Ask for the moon. Ask for it. You don't get what you don't ask for. Buyers. In a market where we have 50% less transactions, the buyer has the power. I have not operated in a buyer's market since 2012. Buyer's markets are awesome, but you have to act different. You have to know you have the power and write better offers. You will get told no a lot. Who cares? Write another one. Write another one. Write another one. So again, the housing market is broken. If you haven't heard me say this, I'll give a quick outline because people keep asking. The Federal Reserve broke the housing market 3 years ago. They broke the housing market when you could start getting 30-year mortgages under 4%. They broke it again at 3.5%, and they kept it broken at under 3%. 13% of mortgages are under 3% on residential properties. Those folks are never moving. 50% are at 3.5%, and I think 73% are sub 4%. In a world where I now fear mortgage rates go to 7%, the move-up buyer is dead. They're staying put for years. They will buy bunk beds before they buy a home with an extra bedroom because, again, the extra bedroom costs $100,000, but also their mortgage goes from 3 to 7. Do the math yourself. In a world where your mortgage goes from 3 to 7% on an extra $100,000, folks, your payments are up almost 300%. I'm sorry, but your kids can live in a room with bunk beds. It's just the world we live in. The housing market is broken. And unfortunately, in a world like I see, the first-time home buyer is hurt the most. Because if the move-up buyer doesn't move, that means they don't sell. And again, unfortunately, if you were listening to these channels about 2020 and 2021 being bad years, they were the best years ever. I did the math for you. Sorry. They just were. I don't know why you listen to renters that tell you that 2020 and 2021 were bad. They weren't. Mathematically speaking, they were the most affordable. Interest rates matter. Today, the market's unaffordable. I get it. That doesn't mean we have a crash. In a world where there's price, interest rate, and wages, and of course, time, it's all of those things that work together. And until we have wave after wave of forced sellers, which, I don't know, might come if unemployment went to 10%. Anybody really see 10% in the future? I don't. I have a hard time envisioning 7%. That's a double. That's a double from where we are today. Could it get to 10? Sure. What do I know? Who knows? But anybody here think that the Fed doesn't whack rates if we get unemployment of 10%? Seriously? Really? And then what happens? Well, we just start the party over again. Yeah, pretty crazy. Builders. Folks, builders. They're just going to stop. I saw so many channels talk about builders having 11 months of supply. These people are feeding you an inaccurate story. Again, I don't bring you this data to discourage you. I bring you this data because it's information and power. It's the truth. These other channels are lying to you. Yes, it is a factual statement to say new inventory is roughly 11 months. It's 10.9. But did you know 90% of that inventory is in process or just a lot? Yes, folks, 9.87 months of the 10.9 aren't completed. We don't have 10.9 months of finished product. That is laughable. People want it so bad. And they know they get views by saying crash and price and this. There are people who are renters today who are talking crash in every video who will end up buying a home because of their crash videos. I think that is so funny. That is so funny to me. They're going to make so much money from crash videos and all of your clicks. and they're going to buy a home. That is America is a wonderful country. Crash, crash, crash. Oh, I'm going to buy a home because I did crash videos. I think that is so funny. That is so funny. So again, I think rates are going to 7%. I think that's the big change from Jerome Powell yesterday. I think the 30-year money is going to go to 7%. I don't know that we stay there long being years. I think we're there quarters. I think the market goes super soft transactions, and then the Fed kind of reverses. Again, I think we have to rip the Band-Aid off. We have to cause pain. We have to get this behind us. We have to wring out liquidity. You know, if you've heard me on my channel for the last 6 months, I'm like, Jerome, rip the freaking Band-Aid off. Let's go. I think he tried to do it yesterday. Our first test will be September 21st, 3 weeks away. Does he bang us with 75 or does he wimp out with 50? We'll know in 3 weeks. Let's see. And then lastly, inventory is going down. This was my greatest fear. Again, if you are preaching crash, you have to hope inventory spikes and keeps going up. Redfin put out an article yesterday, which I hope to look at later today for you, that actually shows inventories down 15%. That is wild to think about. And again, how can that be? How can that be? It's because the Fed broke housing. You not only have record demand destruction, which everybody sees, myself included. What most people are missing, and I saw first and have seen loudest and get heat for it, is supply is destroyed. There's nothing coming on the market. Or if it does come on the market, it comes on at a stupid price that nobody wants to buy. We have sellers and buyers sitting down and not agreeing. What does that mean? Transaction crash. Recession. Housing depression. Yep. All right, so let's go back and say hello to everyone. Hey, Jeffrey, good morning. How are you? Dion, good morning. Thank you for joining early. Ninja, I like that name. Ninja Vanish, 24/7. I like that. Good morning. How are you? Nathan, good morning. Better Home Rental, good morning. How are you? ET, good morning. Sean, good morning from the beautiful Ireland today. Oh, that's cool. On vacation, but had to catch Q&A. Awesome. Jeff, let me see Sunny. I thought everybody made fun of me for showing my dogs. I thought if you were a guy, you weren't supposed to like small dogs. They're sleeping. I'm not going to wake them up. Let's see. Jeffrey, price is way too sticky. Yeah, I agree. Maybe mid-23, there will be reductions in price, reasonable levels. Until then, negotiate from seller financing for sensible payment terms. Couldn't agree more. Couldn't agree more. Housing is sticky. It's called, you can look it up. If you want to look up your economic term for the weekend, look up price inelasticity. Inelasticity. Basically means it's sticky. Prices don't go down fast. This is not the stock market or crypto or NFTs. Absolutely. Absolutely. In a phrase or a few words, describe what canceling 20 million student debt will do to housing, or if you think it will even affect it. What's your initial gut reaction? So actually, I think there's a couple of things. There is it is inflationary. I don't think there's any question. I think a lot of that kind of consumption was already planned in because, again, student debt has been delayed for what, 20 months, 24 months? It's now delayed again till January 1st. So I think a lot of that is already in the works. It probably unlocks a little bit of kind of short-term demand. But I think the real problem / opportunity, whatever, is we have 20 million Americans whose debt to income ratio is about to look better. It just is. This debt was sitting on your credit report. It was sitting there if you were going to apply for a mortgage or an auto loan or whatever. It could cause a no answer. I believe there's 20 million Americans whose credit profile is about to look better, and probably much better. So my gut reaction first is I actually think auto sales go up first. That's my gut. That's my first gut reaction. Americans should use this time to save money, but you and I both know that's not going to happen en masse. So, Jeff, my first gut says auto sales go up. That's my first reaction. Will it impact housing? Probably at the margin. There will be some number. I mean, let's just play this out. 20 million folks, debt wiped out, debt to income looks better. Even if you assume just 5%, shoot, let's assume 2.5%. No, let's do 5. 5's better. Let's assume 5% of 20 million want to buy a home. No, actually, probably do it this way. Probably of the 20 million, probably 20% want to buy a home. So I got a super chat. I have to go see what it is. I don't know how this works. How does, oh, there it goes. We need a video from your mom. I'll talk about that in a minute. Where are we? So 20 million. Sorry, I got distracted. 20 million. Let's say 20% want to buy a home. So that's 4 million. Let's assume half of those folks got a no answer, but now get a yes answer. That's 2 million. So let's assume half of that half are going to start looking. So I think it creates some more demand. I think somewhere between 250,000 on the really low end, which is like 1%. I mean, shoot, let's do 1%. That's 200,000. That's 1%. Is that right? Yeah, that's 1% of 20 million, 200,000. We have 200,000 more buyers. So that's demand. They're going to be demand on first-time homes. They're not move-up buyers. You're not a move-up buyer. You're a first-time homeowner. So we have suddenly, at a minimum, 200,000 new home buyers. Probably on the high end, it's 5%, which would be 1 million. So again, from where I sit, thinking about this for 10 minutes, we've just enabled more demand in the part of the market where we have no supply. Oh, let the federal government screw up housing even more. I don't know. That's my short answer, Jeff. Back to Dion's question. Yes, I do plan. I know I made a promise, as did my mother. When we did 500 cards, we would do an interview. She is nervous to do it, but we agreed that she would come down for the holidays, and we'll do it then. So it will happen. It will happen this year. I need to be sensitive. She does live quite far away, but yeah, she's going to come to the office, I believe, and have a discussion. So when it finally gets scheduled, I will reach out to everybody to say what kind of questions you want. I do look forward to it. I think she's a wonderful, wonderful human being. I think she went through. My mom made sacrifices for my sister and I that I would not have made. She was in a horrible marriage for way too long. And she did that for my sister and I. I wish she didn't do it. I wish she wouldn't have done that sacrifice, but I have to tell you, I would not be sitting here today having this conversation with you if she did not. And that hurts me to say. We would have had to move to Michigan. God, how old would I have been? Probably 8 or 9. I would be a different human being. I just would be. I would be different. Not better, not worse, different. Yeah, that hurts to say. I wish she didn't make it. I never like to see her suffer, struggle like that. So I can't pay that back. All right, what's Matt doing now? Oh, I should have her as a guest on the Three Amigos. That could be fun, actually. She likes you two guys. My mom actually put a comment out the other day. I think she said something like, Dion's the soul. What did she say? Dion's the golden voice, Matt's the soul or something. It was pretty cool. She says really nice things about you guys. She likes Dion, Matt, and Mike, I'm drawing a blank. Where are we? All right, so that was Jeff's question. Sean, what impact do you think student loan payments starting up again will do to lower inflation? It's gonna take money out of the system. It's going to probably hurt. Think about it. If you think about the average student loan payment, which I don't know what it is, but let's assume it's $250. That was discretionary income for lots of people for 2 years. So $250 out of 20 some odd million folks, it's probably going to hurt movie theaters. It's probably the little extras. It's going to hurt. Without question, it's going to hurt. It's going to pull demand off the market. It just is. Ultimate bargains. The Fed raises 100 basis points every month for at least 10 months to break inflation. Less means that the Fed is trying to protect its friends and insolvent central banking system. I get your I get what you're saying. I don't agree. I certainly don't agree with 10 months straight. We'll see. Again, I was very happy with what Jerome Powell said yesterday. For the first time, he kicked Wall Street in the nuts. He just did. There is no chance in hell the market was ready for what Jerome Powell said Friday. The market was not ready, and that is awesome. Awesome. You don't have a 1,000-point down day if you are ready for Jerome Powell to kick you in the nuts. It hurt. It shocked. It was awesome. Do it again. I think we have a test on the 21st. It's really simple. I think the data going into the 21st will give everybody and their brother a chance to scream peak inflation. And if Jerome Powell comes over the top with the right cross and says, here's 75, thank you very much, I hope he does. Let's see. Let's see. Starting to hear more and more other experts calling transaction crash, not price crash. You nailed it. Nice shirt, by the way. Thank you. Yeah, I get a lot of heat because I do think a crash in transaction is important. I think a transaction crash actually pulls the entire U.S. economy into a recession. I think that is important. Just because I don't believe there's this epic price crash coming, I get lots of hate. I don't think it's warranted. People disagree with me. That's cool. But man, I get some vicious hate. I've blocked more people over price crash for just being nasty. So I don't know. It's unfortunate. Everybody wants to, because they've been listening to these crash channels for 2 years. They're hoping they didn't miss the boat. Well, guess what? 2020 and 2021 were the best 2 years. I don't know what to tell you. Yeah. So pretty cool. It's fun to be right. You know what's really fun? It's fun to be right and so early. So yeah, it's pretty cool. Dividend Dave, morning. Hey, how you doing, buddy? JC, good morning. This as well. The housing correction intensifies. Blackstone to stop buying homes in 38 regional housing markets. Yeah, I read that article. One of the markets, by the way, Boise and Fresno, California, and Memphis, Tennessee. I remember from memory. What's interesting is, again, a lot of people will take that message and spin it negatively. Here's the deal. What did I tell you like 3 days before we got the Blackstone message? I showed you that Fresno, California was unaffordable. It was a 31, getting really close to my dangerous 25. When housing gets that low, you slow down. And that's what Blackstone did. Blackstone didn't sell. They're not selling all their inventory in Fresno, in Boise, in Memphis. They're like, no, it's just too expensive. We're going to keep what we have. We're going to keep the cash flow. We're going to keep going. And, oh, by the way, did you know that Blackstone operates in over 80 markets? So they're still buying rentals that make good cash flow or yield or ROC, return on capital, or cash on cash. They're just not buying in 38 markets that are unaffordable. Good for them. They're not selling. Everybody's like, what happens when these guys sell? Guys, they bought these for cash flow. They're never selling. Their debt structure, once they wrap this into a REIT, they're never going to sell. they'll trade them to other hedge funds in big blankets. They're not going to sell them one off to you and me. Once these Wall Street firms take a property off the market, it's not coming back. It's not coming back, at least not for decades. Stephen, how many days on market do you think it takes for Wish Pricing to pull their listing? That is a great question. I think it's different by different markets. I'm hearing, again, this is from agents. I think you have to know your buy box, but I have heard from hot markets 10 days, as soon as 10 days. I've heard from multiple agents. They took a listing that they knew was Wish Pricing. They told it was Wish Pricing. The guy said, I wanted to try it no matter what. So they threw it on. 10 days later, they canceled the contract. So it can be as short as 10 days. What I'm hearing from others is they'll put it on and they'll have their first price drop at 14 days. And then they'll take it off the market at 30 days. So I called July 20th. I think by September 15th, October 1st at the latest, we're going to know where we are. I think a lot of Wish Pricing and cancellations and expireds will happen by October 1st. Yep. Did you get my Instagram message? I got my first deal with help and wanted to connect. I will look. I didn't look at Instagram this morning because I was getting ready for the daily financial news, but let me see. Let's see. I don't know. Dividend Dave. Was that Dividend Dave? Yeah, Dividend Dave. I don't see a message from Dividend Dave. Can you send me it again? I see one from Greg, but no Dave. Could you send me it again, please? I don't see anything in my hidden folder either. So Dave, could you send it to me again? I just need your address. I will send you a card and give you a shout out on the daily financial news. Oh, when you're talking about 7% rates, are you referring to owner occ or investments? That's a great question. I sometimes get rolling and I just assume all of you can read my mind. I apologize for that. So when I talk about rates like that, I'm always talking owner occ. I always talk the lowest of the low, knowing that investor loans are a point higher. So my fear now with the Fed, Powell doing his shtick, the Fed funds going north of 4, 10-year going north of 5.5, the 30-year will be high 6s, maybe low 7s. That was owner occ. That's why the housing market is so broken. I'm curious, what would it take for banks to all of a sudden close HELOCs? I would tell you a doubling of unemployment. I don't even think it takes a double. So we're at 3.5%, Lissa. Hopefully I said that right today. I think of unemployment spiked. Like if we had unemployment go from 3.5 to 5.5 in like a 4-month window, that would be enough to freak banks out. Banks will get very nervous if unemployment. That's what I would be watching. Banks are nervous. Banks are nervous, and when they get nervous, HELOCs are the first. HELOCs could go in an afternoon. I've sold to banks. I've been at these meetings. I've watched them make portfolio decisions. I've sat there quietly as an observer. I've been there. And seriously, in a 90-minute board meeting, they could decide to close all HELOCs. I've seen them do it. So I would watch unemployment. Sean, that is an amazing question. So this is something that dawned on me this morning when I was did my live stream about the Fed. So let's just play this out because I think Sean brings up an amazing thing we have to ask about. The Fed funds rate are going up without question. The question is, what happens to the 10-year? Because we have to remember that the Fed funds going up has ramifications. One of the ramifications is the dollar gets stronger. It just does. Because the dollar gets stronger, emerging markets are, if emerging markets have debt in dollars, they're screwed. They are screwed. We're going to see debt consolidation, it's going to be ugly. You think Sri Lanka is bad? It is. It could get way worse in way more emerging markets. It's not fun to think about. But then we have like tier 1 countries who are in a recession. Folks, Europe's in a recession. Folks, I think China is in a recession. I think much of Asia could be in a recession. We have their central banks raising rates, sure, but not enough. I think you're right, Sean. I think one of the unexpected surprises, benefits, whatever you want to call it, is you are going to see not only foreign countries, but you're going to see large institutions like the Wealth Fund of Netherlands, I think, is like one of the second or third largest out there. They will start buying treasuries. You get the treasury to 4%. I think it's like 3.1 yesterday. The 10-year treasury could be at 4 before the end of the year. You are going to get gargantuan purchases of the 10-year, which is going to help the Fed sell, by the way. They're going to lower their balance sheet. They're just going to sell right into that. So yeah, I think what's going to happen is the margin, right? If you take the federal funds rate today at 2.25 and the 10-year, let's call it 3.1, the margin is 85 basis points. I think it is possible that collapses or compresses. I don't ever think it goes to 0. I certainly don't think it inverts, but you could see that compress. And the dollar is going to get stronger. Yeah. Foreign countries, specifically emerging markets with dollar-denominated debt, oh, that's going to hurt. Nick, you're very welcome. Yep. Yeah. Build your buy box. If the numbers don't work, they don't work. I mean, my market of Fresno, California is unaffordable. I talked about that. Doesn't mean I'm going to stop. I'm going to try to get some seller financing to goose the yield, but I will likely build, right? Build an ADU. What do you do when the market's unaffordable? You build. And if you're building an ADU in a market that's slowing down, contractors should be more available. So there's always something to do. Seth, good morning, everyone. How are you? Zuber always hypes me up. Appreciate that. I try. Oh, it's funny. iBuyers. Oh, I have a note. Where did I got that this morning? One sec. This was an amazing story. Where did I find that? Was that an email? So I'm going to go from memory. So one of the cards that I sent out today on the Daily Financial News, they bought a property in somewhere in Arizona. I want to say Summerlin, but that's Vegas. Anyway, somewhere in Phoenix. Here's the story from my memory. Open Door buys the house for $502. Open Door does light cleaning and tries to sell it at $562. They try to make $60,000. It stays on the market for 100 days. My buyer, who follows one rental at a time, writes an aggressive offer at $420. $420. I think they agree from memory at like $430 plus 2% seller credits. Listen to that again. Open Door overpays and buys it at $502. Open Door tries to sell it at $562. They keep it on the market for 100 days. A one rental at a time fan student writes a stupid low offer at $420. They end up buying it at $430 with 2 points of closer cost credit. You bet your ass you can buy from iBuyers. iBuyers are essentially big piggy banks who are publicly traded, who are reserved for losses. Folks, if your buy box has iBuyers in it, repeat what my student did. Track them. Days on market matters. There is zero chance. Open Door lists that at 562. You write a 420 offer on day one. They will laugh you out of the building. There is zero chance. Open Door lists that at 562. They take your offer at 420 after 30 days. But 100 days? We know what happened. 420 goes to 430 plus 2 points of credit. If you are not taking advantage of iBuyers, you are not paying attention. You bet your ass iBuyers have opportunity. Again, days on market matter. I keep screaming, stop looking at first day listings. I originally went to 15 when Business Insider interviewed me. I'm now at 30. You don't need every deal. You just need one. Use time. Ask for credits. Ask for closing costs. Write stupid offers. Writing a 420 on a 560 offer is stupid. And they got it because it was 100 days old. I think that is an awesome story. Seth, Southern California housing market is slowly coming down. I prefer higher interest rates versus higher home prices. Okay, I've seen the meme. Marry the price, date the rate or interest rate. I've seen it. Do the math. Every vacant lots are merely a poured concrete foundation, costs money. True. Hey, Paul V, good morning. How are you? Good morning, Zuber and everyone. Do you think there's an outside shot for an 8 handle or maybe a peak of 7.5? Again, if we're talking owner OC 30-year, kind of best rates, best credit, 20% down. I don't know. I mean, an 8, it's not out of the question. Do I think it's likely? Not with what I see today. Not with what I see today. Could I see 7.5? Yeah. I think it's going to be 7, between 7 and 7.25. I just think there's we've already seen what happens when rates got to 6, right? They went to 6.03 for like 2 weeks. Man, can you imagine another point higher? Woo. I don't know. Yeah, I mean, it's possible. Yeah. Selling unfinished lots to get out of positions are painful. Yep. Yeah, I really do. If you heard my daily financial news yesterday, kind of pre-Powell's speech, I was begging for 75, but thought he would give us 50. I flipped that yesterday afternoon. I now think you're right. I think he's like, guys, I think he walked up to Mr. Stock Market, kicked him in the nuts. You saw 1,000 points. The market wasn't ready. So yeah, I think he's giving him 75. We're going to see. We're going to see September 21st. Yep. 15% down compared to what? I don't know what that means. The Fed broke housing by intent and design, not by accident. I don't really think it matters. Yeah, I don't think that way. I don't think that way. It happened. I have to deal with it. Whether or not they did it on purpose or whether or not it was a happy accident, I don't think matters. At least it doesn't matter to me. It happened, so I have to deal with it. When is the best time to start searching homes to buy? Yesterday. It takes you a long time to learn your buy box. What are you just going to sit down and wait for some YouTube channel to ring a bell? The best time to start looking and learning is yesterday. Investor Wealth, good morning. Nicholas, good morning. Afro Capitalist, good morning. Okay, James. As far as my buy box, I'm using 9% rates as my mortgage. Okay, 2 to 3% over current rates as long as it cash flows there. I think that's wise. Again, plan for the worst. Planning for the worst case and dealing with what happens is a good move. I like it. Except on Sunday, 9 or 10 a.m. when the day is starting. I look at houses that are listed more than 30 days. Totally agree. Totally agree. You got to look every day. You got to look every day. You just got to practice. David, good morning. How are you? Should I start looking buy a home in Orlando in February or wait later? You should start looking yesterday. What part of yesterday? Yesterday. Just because you look doesn't mean you're writing an offer. It means you're looking and learning. Why wait? What's magic about February? What's magic about November? What's magic? Start looking yesterday. Learn your buy box yesterday. Good morning. Transactions were up in my market in July report. What should I be doing? I make offers close to list and not getting it. I'm finding average is around 5 to 6 and I'm trying for 8. Keep doing what you're doing. I have obviously no idea what market you're in. There's lots of markets that are still hot, i.e. Blackstone is still buying in 42 of the 80 markets. So maybe you're in a hot market. Just keep doing what you're doing. You're heading into a slower season. Summer is the hottest and hardest time. Keep going. Just keep doing you. Again, I've written 100 offers. My record is 100 offers before getting a deal. So just keep going. It's practice, repetition. Keep going. You got this. Yeah, you need to make 100 offers to get one counter. Yeah. Again, go back to my example. How many of you watching this would not have the balls? Just be honest with yourself. You see a property listed for 560 or 562 and the numbers work for you at 420. How many of you do not write that offer? I'm going to guess most of you. One of my students who do the work, know their numbers, wrote that damn offer and got a deal at 430 with 8,600 in seller credits. Do the work. Zuber, do you think now is the bottom for the housing price? If not yet, what month do you think it will bottom? I think housing is seasonal. I think winter months are always lower. So it would not shock me if month-on-month numbers are something lower. But again, these national averages, folks, should mean nothing to you. They only mean something to me as an economist and somebody who's looked at them every month for 30 years. I will say it again. The most important metric everyone watching me should follow is day to day. Day to day in your buy box. Next, I look at year on year because otherwise I let seasonality screw with my brain. And then lastly is month on month. Housing is seasonal. Inventory will roll over into the winter. Prices will statistically go lower because the inventory mix changes. All the big homes sell in the summer because that's when families move. It happens every year. It's not magical. Every year, pricing goes down in the winter, not in the summer. I don't know why people don't get this. So what I think about a national median price low should mean absolutely nothing. Do the work in your buy box every single day. Are prices going to come down 20 to 30% on average nationally over the next 2 to 3 years? Why would they do that? What is happening that would cause that? I don't understand. I mean, maybe. I mean, Mike, I have no idea. I have no idea. I certainly don't think so. I think people calling for a 30% crash are foolish. But hey, who knows? Maybe. Maybe World War III happens. Maybe mortgages are outlawed. Maybe the government says you can only own one home, and if you own more than one, you have to sell. Who knows? Some crazy black swan event can happen and real estate could go to zero. I don't know. But that is not my base case. I think waiting for a 30% crash is a 30% national crash is you might be waiting a long time. Could Vegas go 30% because it got out of whack? Sure. Could Phoenix? Maybe. Could Boise? Sure. The nation? Barring some crazy black swan events, I don't know. I mean, nobody has been able to tell me a story that I can believe in. I have been doing this for 20 years, looked every day. I've invested through the last crash. I positioned myself to take advantage of the last crash. I got out at the peak, so I saw it coming. You don't have forced sellers. You don't have wave of forced sellers. You don't have 50% of loans that are ARMs. You don't have 28% of loans that are 2 and 28. There's just no recipe for seller after seller after seller after seller. I just don't see it. Could it happen? Sure. What do I know? Yep, do the work. Yep. The market was ready, but I was the market was ready, but I was ready short. I think you're saying you were short the market. If you were, congrats. Congrats. Wow, that's nice. Renting rentals quick. Wow. That's Don Bev. Yeah, that's again, I don't think I would be, again, just me talking to myself here. I don't think I would be too nervous about them closing an equity line or a HELOC unless unemployment started going the other way. Again, banks are skittish. Banks will close HELOCs in a minute. I mean, quickly, like I talked about earlier. But there has to be, you can see it coming. You can see it coming. Watch unemployment. Watch unemployment. Like if like unemployment jumped from 3.5% to 5% in like 3 months, yeah, I might tap my HELOC. But I mean, if we're going to get a jobs number on Friday, September 2nd, it's probably going to be a pretty good number. So, yeah. Yeah, I understand. I get it. Lyric. So should I pull the trigger on a house and refinance in 5 to 10 years? Dude, I have no idea. I don't know your buy box. I don't know your market. I don't know your plan. I don't know the homeowner. I don't know renter. No idea. I can tell you this much. I am buying every great deal I can. I say great on purpose. I don't buy average. I don't even buy good deals. I'm buying every great deal I can, as are all my followers. So, Lyric, is it a great deal or is it just a eh? If it's just a nah, then no, of course not. My team, people that follow me, are writing 420 offers on 562 lists and getting great deals. It is always a great day to get a great deal. You need to tell me, is it a great deal? I don't know your buy box. I haven't looked at it. I never will look at it. I'm not doing the work for you. No idea. Well, at least the upper middle class and upper class can take cheaper vacations this winter with a strong dollar. Yeah, dude, if you ever want to go to Europe, whew, go. Thoughts on forcing people back to office work to cut employees instead of announcing layoffs as a start? I think companies are going to do what companies do. They always will. They're going to do what they're going to do. If you don't want to work there, don't work there. Awesome. Bought it for 405, 2% of seller credit. That's awesome. I just love that. Started at 190. We are talking to the seller financing a duplex at 130 after 80 days. Brett, that is exactly a great deal. Again, I can guess 190, get it at 130, seller financing, 80 days on market. Folks, pay attention. Pay attention. Days on market matter. I am only fishing at 30 days or more. I don't care if it's first day listing. Don't care. I want to find motivated sellers. They're out there. Open Door was a motivated seller at 100 days. Brett has an example of a seller being motivated at 80 days. Do the work. Do the work. All right, folks, I'm going to stop it right there. Sorry again, I can't get to all the questions. I'm going to shut this down because I owe my students a 30-minute live in our private Facebook group. So I'm going to check out, drink some water. I will talk to you there soon. Bye-bye.